We begin with the numbers. Apple's last quarterly dividend was $0.25 per share. It is a figure that provides a steady, predictable return for those who own the stock. Today, as of November 16, 2025, the stock price stands at $215.45. This represents a significant journey from where the stock was earlier in the year. For context, when we last discussed this topic, the price was hovering around $190. These two numbers, the dividend and the price, form the foundation of our discussion today. They are the core metrics that investors, both large and small, watch with keen interest. A dividend is a direct payment from a company to its shareholders. It is a tangible reward for investing capital into the business. For a company of Apple's scale, the decision to pay a dividend is a powerful statement. It signals financial stability and confidence in future earnings. Apple distributes this payment to its shareholders 4 times a year, once every quarter. This regular cadence provides a consistent income stream, which can be particularly attractive to investors who rely on their portfolios for cash flow. It is a sign of a mature, profitable, and well-managed corporation. The dividend serves as more than just a simple cash payment. It acts as an anchor, grounding the stock's valuation in a real, measurable return of capital. While stock prices can be volatile, driven by market sentiment and speculation, the dividend is a concrete figure declared by the company's board of directors. It reflects the underlying health of the business and its ability to generate cash far in excess of its operational needs. Let's look deeper into what the dividend means. We can use 2 key metrics: the dividend yield and the payout ratio. The dividend yield tells you the annual cash return relative to the stock's price. With an annual dividend of $1 per share and a price of $215.45, the current yield is approximately 0.46%. The payout ratio offers a window into the dividend's sustainability. Currently, Apple's payout ratio is around 15%, a very strong sign. Now let's examine the stock's price movement. Apple has seen strong performance throughout 2024 and into 2025. One of the most significant drivers has been the successful integration of artificial intelligence across its product ecosystem. iPhone, Mac, its suite of services. This move is critical for maintaining a competitive edge and encouraging upgrades, driving the product cycle. There is growing discussion about ambitions in new categories, robotics, highlighted by major banks like Morgan Stanley. Any success here could open new revenue streams and fuel long-term growth. The core business remains paramount. iPhone performance is still the single most important factor. Services generate high-margin, recurring revenue that smooths hardware cyclicality. This trifecta, strong core, growing services, and future innovation, has propelled the stock to current levels. When we look to the future, analysts provide a useful, though not infallible, guide, and the consensus is cautiously optimistic. The median 12-month price target sits around $230. The range is wide, from $180 to $270. Bulls cite AI upgrades and services growth. Cautious views point to competition, regulation, and valuation already pricing in good news. No investment is without risk. Macroeconomic slowdowns can delay device upgrades and pressure revenue. Competition in smartphones, AI, and cloud remains intense. Regulatory scrutiny could impact the highly profitable services segment. Geopolitics or disruptions to the supply chain can lead to shortages and lost sales. The picture today is immense strength coupled with significant expectations. Apple pays a small but secure dividend, backed by a fortress-like balance sheet and strong cash flow. With a history of increases and a low payout ratio, growth in the dividend is likely over time. If you need high income now, Apple's sub-0.5% yield will not meet those needs. For long-term investors seeking quality, stability, dividend growth potential, and capital appreciation, Apple remains compelling. Monitor quarterly earnings, watch for true product innovation, and stay aware of competitive and regulatory risks. Make your decision based on understanding and whether Apple fits your long-term plan.